Economist betting against a Melbourne Cup rate cut later today after already slashing rates 3 times this year. So joining me now is Brendan Rynne, Chief Economist at KPMG. Brendan, good morning to you. Thanks for joining us. So
good morning. How are you?
What's going to happen today?
Oh, look, we think that the RBA is going to sit on its hands after cutting rates last month. We think that certainly there's enough reason to just take a wait-and-see approach and see how unemployment and inflation pan out over the next month or so.
OK, so what do you think the reasoning is for that?
Look, you're still seeing reasonably strong growth within the employment market, although unemployment's still sticky at around 5.3%. That's because more people are actually looking for work rather than a lack of jobs themselves, and the fact that you're starting to see some pressure building back up within house prices. So there are some countervailing arguments one way or the other to, in fact, keep rates on hold.
It's not just that sort of growth that's sticky, it's retail as well. We saw the figures that came out yesterday.
Yeah, that's right.
And they didn't go the way that we would have liked. Is it as bad as what's being made out?
Look, there's certainly a real weakness within the consumption side of the Australian economy and also the investment side of the Australian economy. From a consumption side, you're seeing wages growth still relatively anemic. People have seen their house prices decline, so they're a bit concerned about how much wealth they've got. And banks are also being careful about lending more money. So all of those elements combined are really holding back consumption growth, which is translating through weak retail sales.
So there seems to be a bit of a contradiction in terms of house prices going down, but the market is now heating up again, right?
So what they've done is house prices basically reached a floor about the middle of the year. And what you're now seeing is that turnaround and a quick recovery in house prices. But in Sydney, they're still about 5 to 10% off where they were, and Melbourne's about 5% off where they were from a peak. So they will start to recover. The question is, if rates drop so low quickly, whether that recovery becomes faster than it otherwise should do, which would concern the Reserve Bank.
You would have thought, I mean, retail is really where most interest has been in the last 24 hours or so since those figures came out. But we are heading into the Christmas period, so it stands to reason that you know, things will get better. How much pressure do you think will be on those figures the next time they roll around?
Oh, look, I think that they are a really strong indicator and a really quick indicator of what's happening within the economy now. And so as they remain weak, there will be more pressure within not only the Reserve Bank, but the government more broadly to look at ways to stimulate the economy and in particular get money into people's pockets so that they can spend that money and boost the consumption side of the economy.
Critics have said, Brendan, that it just proves that those tax cuts have not worked. What's your view on that?
Yeah, look, they certainly have been less effective than the government would have hoped them to be. You've seen that not only with the reduced number of people getting those returns, but also the lower amount of what those returns have actually ended up being. So rather than being the full $1,000 or so, they've been on average only hundreds of dollars.
So what's the next step?
Look, I think that there's still going to be a further easing within the interest rate environment. Certainly think the Reserve Bank will drop rates 1, possibly 2 more times. Not only there are these domestic factors influencing that, but also global factors, external factors to Australia. So the exchange rates played a really strong part in promoting growth while domestic economy has been weak. If other countries keep dropping rates like you've seen in the US, then that will push up the Australian dollar, which is not what the Reserve Bank wants to see. So there is certainly a potential to see further rate cuts, and there is a real question about the government's need to start helping stimulate the economy through spending money and fiscal policy outcomes.
And where do you think that should be? Should more tax cuts be brought in or brought forward?
Look, tax cuts are always dependent on people actually then spending that money. There could be better ways of spending that money. One of the ways that we've been advocating has been an increase in the New Start allowance, which means that the poorest people in society will in fact get a boost of about $3 to $3.5 billion to spend in aggregate, and they spend all the money that they receive. So you know that that's not going to be held back. Rather, it will basically flow straight through into the economy.
I mean, the government counters that by saying it's about infrastructure and having the infrastructure there and creating jobs that way. So it's a different argument. And where do you lie on that one?
Look, you need both. The challenge with infrastructure is the long lead times. And everyone keeps talking about shovel-ready projects. Well, pretty much I think that we've already got all those lined up for the next couple of years. What we need, if we're looking to try to stimulate the economy, is trying to get cash out there quickly. And one of the quickest ways to do that would be to adjust the New Start allowance, rather than just trying to add more projects into the pipeline, which is already pretty full and are probably only going to relate to wages pressure to the tradie sector.